Indie housing market. Get the latest insights right here.
Welcome back to Indie Housing Market. I'm Kyle Morse with FC Tucker and Morse Property Group.
I'm Shelly Walters with Shelly Walters Realty Group and FC Tucker. And our guest today.
I'm the one that doesn't fit in this group, but it's still nice to be.
You were part of the group.
We all did this quite a while ago in mass, literally every week. And so it's nice to be back. I'm Greg Cooper from Compass Real Estate. It is a privilege to be with you both.
It's so fun to have you back. Greg and I started way back doing videos at the farmer's market.
Like 2018, 19, right in there.
Was
17?
it really?
Yeah.
Jeez.
Back when we thought houses were overpriced. Seriously,
Oops.
that was the thing. Like in 18, 19, people like, I'm not buying
Wouldn't it be
right
fun
now.
to get those out and see what we thought then?
Well, they're out there somewhere on the interweb. We probably could find them, although I'm not sure we would want to, because I'm not sure how many of our prognostications would have come true at this point in time. Nobody knew COVID was coming, obviously.
Man, you got the best voice in real estate. I promise.
Yeah.
I always tell people, God gets the credit for it. I just get to use it. So, and I'm okay with that, actually. So.
Well, because of your background. Tell everybody your background.
So I was in the radio business when I came out of Indiana University here in the greater Indianapolis area for a number of years. And I was, long story short, I was part of my duties in the radio business where I was an airborne traffic reporter. And over the course of 7 months, I crashed in a Bell Jet Ranger helicopter, and then I crashed in a Cessna 182. It was literally 7 months apart. And I got out of the airplane on the second crash, and I went to the liquor store and the dry cleaners and the career counseling center, and here I am in real estate.
Awesome.
Which is better.
That remains to be seen at this point. There's crashes going on all over the place.
That's true.
That's got to be a trip to be up in the, because I've been on a helicopter, and I mean, my dad was in a helicopter in Vietnam, but like I remember we did a tour of St. Louis Arch, right? Back when I was a child, and a helicopter scared the crap out of me because when they bank, like it's much more noticeable.
Yep.
And I would like slide in the seat regardless of
Even
with
the seatbelt on, you're sliding.
Yeah, and you're like, do I trust this door?
Yep.
I was like, I'm never doing this again.
We flew in the summer without the doors.
Yeah, so that's what my dad did. He flew without the doors.
No.
I have friends who've been to Hawaii and they did the tours
Everybody
without
does
the
it, yeah.
doors.
Yeah. No.
I didn't do it because I'm like, I've worked really hard to change my life. I'm not trying to die in a helicopter
Yeah, there would be a
accident.
very, very tragic irony if that would be the case.
Yeah,
You don't need that.
And also with the Grand Canyon stuff, too.
Right.
There's been a lot of wrecks with those people that take people just to look at all pretty.
Well, statistically, eventually, if you're not careful, you're going to have an issue because they're flying so many people that the maintenance is not always perfect.
Yep. But still, you are at a higher risk to have a car accident than
Absolutely
than a
correct.
plane accident.
Absolutely
Yeah.
correct.
Well, thus the background of the voice. That's why I wanted to say that.
It is.
So
Aren't you glad you heard all of that, ladies and gentlemen?
That's amazing. I just bet like when you're like talking to your wife or kids or anything like that, and you're calm, like it's just a very disarming, calming voice. But I also think like probably when you're angry.
You know what? It takes a lot. I mean, I
believe
I
that.
just don't.
I don't think I've ever seen you angry.
Most people, 98% of the time, I'm never. There've only been a few occasions in the last few years, and those occasions I've now left them behind, so we don't have to worry about that anymore.
And you get fired up. I'll say that. But it's
it can
fun.
happen. Yeah, but no, I don't. I just don't have the emotional energy to be angry like that. It's just, it's not worth our time.
It's not. It's a complete waste. I just don't give other people that kind of ability to own.
Amen to that.
Or something else.
Amen.
You know.
Yeah.
So
And if it's not controllable, the worst is to actually get it even in worse condition by getting angrier and other people involved.
Yeah.
And
Yeah.
that's a whole nother story.
It's 'cause
This
anger-
is a real estate podcast, not a life.
Just lifestyle.
we still
All
teach that.
things covering life here.
Yeah.
This is what we do.
I was taught anger rarely hits its intended target, and so
That's a good one.
because like if you make me mad, most likely I'll take it out on my children somehow, right? Like that's how that works.
Yep.
Yeah.
Somebody.
Yeah. Okay, so real estate. That's what we talk about. So the market is odd. It's what we predicted it would be like. I don't know what the lifespan of it is because last year we talked about it was going to be a really intense seller's market, and then it just dropped off a cliff like third or fourth week of April last year. And so like we were really hedging our bets, like it's going to be really intense, but I don't know what its lifespan will be. Now we have all these tariffs, all these other things. We just had a tornado go through here, which we were talking about. Like I know you guys have both been really involved with like paying attention to that. For me, it's really interesting. I'm from Martinsville originally. I live over in McCordsville. I can't remember the last time a tornado, if ever, actually touched down in Indy. I can remember, I want to say like around maybe 2005. There was the one in Greenwood down in like, was it Home Story or something like, there's a city down there. Homecroft. I know that got decimated really bad. Martinsville's been hit, but I can't remember. And to your point, I know it didn't actually touch down in Carmel. It was
We
just
don't
like,
know.
we don't have
Nobody's
evidence
saying
it touched
that,
down.
but we would see so much more devastation if it touched down.
So there was a tornado that went through downtown Indy, and ironically, given the time that we're recording this, it was during a Final Four.
Really?
And I'll never forget, there were UCLA was one of the teams playing, and the people from California were crazed. They're like, oh my God, I'm never moving to the Midwest. Now they deal with earthquakes, but they just thought that was the craziest thing because there were a bunch of windows that got blown out of one of the tall buildings downtown. Yeah. But it was Final Four weekend. It was like the weekend they were going to do the big concert on the Circle.
Well, at least we get warnings of tornadoes and not earthquakes. But that's what's so funny when people buy houses here. I have one coming in almost inevitably. If somebody's coming here from at least the West Coast or anywhere, not from the Midwest, they have to have a basement for our tornadoes that never come. But one did just come here, but that's the first one I've ever been in.
So when was that one? The UCLA?
It was 05, 06, whatever. It was early in the 2000s when we, and I'd have to look it up, but it was early in the 2000s, and I just remember the hotel people were just howling downtown because all the people from the West Coast that were out on this, getting ready for this big concert, they all came running in, screaming like the world was coming to an end. And yes, you want to take shelter. We don't take these things lightly, but as I tell people that come from, especially the West Coast, I've lived decades and decades and decades. I've never been hit by a tornado, so I think you're probably going to be okay.
I've been really close to them, but I've never been hit.
Well, this one was, I know it went over Greg's house, went over our house, went over Raquel's house. But you're over there in McCordsville. It was really bad. But I'm just very thankful that we had nobody.
Nobody was hurt or killed?
Yeah,
that
100%.
that was lucky. A lot of devastation in a lot of people's homes here.
We have a lot of damage over by us, but some of the biggest damage was flooded basements, right? And so, like, for me, I have a battery backup, and we were in the basement and all of that stuff, but it wasn't even keeping up with the pump. So, like, I would every now and then manually hit both pumps, you know what I mean?
Right.
Because we have two pumps in there, and so it would clear it out, it would lower it, and then I think I was up to like 2, making sure it was clear. But I watched people at midnight already dumping stuff out of their basement. So
well, you had a post about it, and Greg and had just mentioned it to people.
So the weekend before we are recording this right now, it was the 3 days after the tornado. On a Friday night, we had like 3 or 4 inches of rain in a fell swoop, and it was like Florida rain. It was buckets and buckets of, it was tropical rain, and we're not equipped in any way in our houses to be able to deal with that. And little southern Indiana is still suffering mightily right now from the amount of rain that we had last weekend.
And then we got like another 6.
It was crazy.
Just the other day.
Yeah.
And when we were looking at a house this weekend, and they're like, "Do you think the roof's okay?" I was like, "With the amount of rain that we just got, and there's no moisture evidence in the ceiling, your roof is okay. I can't promise you didn't get hail, but I can tell you it's not leaking."
And if the basement didn't leak, you're good to go.
Yeah, this is the time to check all that. Sweetwater and Corder are out of their banks. I know that coming over the spillway, and that was 2008 was the last time anybody's been talking about that happening when Franklin and Columbus went under. But this one, as you said about the basements, I had a client that's moving here from California, and they're not here yet, but we closed. And I was putting the lockbox on, and I could just hear through the door the beep. And I'm like, oh God, that's the sump pump. And I ran down there, and sure enough, it was out of its sump pump, and there was actually 2 sump pumps and a battery backup. They were all done. And when we had to shake them, we had to do all kinds of stuff. They would work. They've been replaced since. But the amount of water coming in from the yard and the tank, the pipe that's getting into the sump pump, it was probably 5 inches in diameter, and it was all water coming out of there, just pouring. There was no way it could keep up with that.
Well, and not just that. So, like, I had to look it up because we didn't have power for 12 hours over there. Like, I don't think most people lost power here, but we lost power. And so there is a shelf life on the battery backup, and it's 5 to 7 hours. So that's why I kept messing with it to so it wouldn't be taxed, so it wouldn't die overnight. Because
here's the lesson for homeowners: check your insurance policies to see what you are covered for in your basement, because those are that homeowners insurance has become probably one of the key issues when you start talking about roofs and other things. I mean, insurance companies are, because of what's happened in the South and Southwest, insurance companies are looking for ways to limit their liability, and most homeowners do not know, A, what they're covered for in replacement costs, and B, some of the ancillary things like a roof. I mean, there are companies out there, and there are a number of them, that will not insure a home on a new home purchase with a roof that's more than 15 years old. They won't take it, or they'll exclude the roof.
Well, and that gets to why we have that section in the purchase agreement. I think we talked about this about 5 weeks ago. I'm so sticky about different sections that we fill in.
Yep.
They're there for a reason.
Yep.
And one of them is when they say that they have, so many days to get their commitment letter from the insurance company. We need to know if the house is insurable.
Yep.
And if you get to 1 day before closing, it's not insurable, we're not closing.
I usually do 10 days for that.
I put 10 as well. Some people put 30.
No.
And I'm like, well, I'm not falling apart at 30 days.
If you're a consumer, you have got to do your diligence when you're buying. You really should be doing your due diligence every time your policy renews, quite frankly, so that you can understand. Not only should you be able to read, and I know it's like watching paint dry, but you've got to read these things, and you got to have your agent or broker, your insurance agent or broker, talk to you about how it's changed, because they are changing, and they're going to continue to change.
And one of the things I see is I see a lot of landlords, because it's a carrying cost. Like there's two different types, right? Like you either overinsure it or you underinsure it. Like for mine, when I did it, like I have vacancy coverage and all this other stuff. I was like, I just want to be safe. But other people, if they're trying to cash flow it, they want it as cheap as possible.
Look at the condo development in Carmel 2 years ago that had a fire. They were covered for, these individual condo owners in this building were covered for 90 to 120 days. Some of them had as much as 6 months. It's been 17, 16 months since they were booted out of there, and it's not done yet. So they're paying for 2 residences. Again, got to do your diligence on your homeowner's insurance.
There are other thing I've been talking about too. We've brought it up a couple of times, but in regards to the insurance policy that you have, every year you should check and see if the coverage is still coverage that you need. Because if your house was bought in 20 or 19 and you have a replacement value of X,
oh yeah, you got to check that.
It's been 8 years or 7 years of solid increase of values. Your house is not covered properly, so that's a whole nother issue.
We did a whole podcast, like the 3 of us, on that like 3 years ago, because that was right after we'd had the major boom for 18 months, and something happened to somebody somewhere, and they were like insured for like $350, and the house was worth $6 all of a sudden, and the replacement cost.
You're right. You're getting a second mortgage to pay for the overage to rebuild the house. Is basically what happens. It's coming out of your pocket.
We had one in my neighborhood that burnt down, I want to say 2 years ago, because of fireworks, and so they threw some fireworks in it, like. They dumped water on them. I mean, they did the things that you're supposed to do, and then they put them in a trash can outside, and it caught the house on fire. And so the builder was Fisher, and the problem they ran into for a while was that Fisher didn't want to rebuild on it because it was a tear down on this slab that had fire, and another builder couldn't build on it.
Right.
I don't know what they actually did to resolve it. There's a house there now, and it's totally fine, but I know that was a whole like 6-9 month process just trying to figure out that. So
Well, that's one of the clue reports in insurance. If somebody comes through and finds out the house had been on fire before, and you're like, nobody told me that. And the sellers either do or don't know. But I mean, do you want to buy a house that was 50% on fire?
Well, that's why
burnt down?
the clause is in the purchase agreement to protect people.
And people don't understand that.
You've got to do that, and it applies for floods or any kind of coverage where you've had a major claim against the house. You need to know that as a consumer.
So, but we went into that because I think it's very relevant, like present time with what we just dealt with. But we were talking about the market, and so what's the market conditions, right? Because we were talking about like what is April going to be like, and we just have all these tariffs, and like there's some volatility in the market right now. Obviously,
tell everybody what you told us. This is, I think, very interesting.
So yesterday the markets were, which interestingly enough, the stock market is what I'm talking about. The stock market was not as volatile yesterday as they predicted it was going to be. It was more volatile at the end of last week, but that's obviously what caused that prediction. And at one point, my loan officer could not even lock a mortgage rate because it was frozen for 2 hours due to the volatility in the market.
That's crazy.
I'm not even sure if in 08 or 09 we had that. It might have been, but I don't remember it. But it's a shocking development when a loan company says, I can't guarantee you a rate right now. I'll let you know when.
Yeah.
I mean,
but in 08, it was very rapid, but it was still 6 months.
Yeah.
Like this is like a week, I mean, that's insanely quick. I mean, that's like an hour, is what it feels like in comparison to a day. But we've talked about this before, like Indianapolis is just kind of independent of other markets, especially with all of the publicity that we've gotten over the north side and being the most desirable area, whether it be, you've got Carmel is one at, Fishers is one at, Westfield is one at, Zionsville. When people come to the north side, I mean, it's like, it's an amazing neighborhood and it's sleepy. You've got Center Grove and Bargersville. Like we just have a lot of really, really good areas. And then we have some really amazing affordable areas like a Greenfield or a Plainfield or Danville, and Brownsburg is amazing, right? And so our market just hasn't really gone the way of the rest of the nation, quite honestly.
Well, this market is incredibly narrow. It's literally neighborhood to neighborhood.
100% agree.
I mean,
house to house, even.
Hamilton County is one thing; it's a different animal. But frankly, if you go to places in all or the other areas around the city, you could go into certain neighborhoods where there's a high demand to live in that price point, and the stuff is selling immediately. Fountain Square is very tough right now.
Yeah.
Bates Hendricks is very tough right now. I mean, the prices are in some cases below what they were a year ago. If you had a $700,000,
but 3 years ago, immediately post COVID, it was nuts.
No,
right?
And if we have one at $700,000 downtown Indy right now, and we can't give it away. If we had a $700,000 house that looked like this, that was in Hamilton County, we'd have had 7 offers, and it would have been sold over list the first week it was on the market. It's just so narrow, and you need to be as a home buyer or seller, frankly, you need to understand what you're in the middle of. It's not like it was where we just put one on the market and we get 6 offers and we sell it, or whatever the number is. Not everybody's getting 6 offers anymore. Some are getting a lot and some are getting none.
You also said, that you need the buyer or seller to know what they're getting into. That's by hiring a good agent.
You got to have good advocacy. You have to.
Yeah, and that person, as your agent, needs to know the neighborhood you're buying in, what's going on, what has happened, and what may be coming forward, and the seller as well when they think their house is worth this or that. And we talk about stats all the time, but the stats for the seller always show what we know because we always see it going on, but the seller just hears. I say this all the time. Sellers always tell us what the neighborhood has been doing. My neighbor next door sold their house.
It's a liar's club. It's a liar's club.
But I look them up. It's like 3 years ago. I'm like,
right, or they don't really know what it sold for. It's hearsay. You cannot. Yeah, well, Sue and John's house sold for X. How do you know that? Where's the proof in the tax records? Where's the you cannot go by word of mouth. You have got to have hard documentation and hard data to be able to judge. And of course, we do that because it's human nature to a degree. We want to know good news. So if we hear something that we think is going to benefit us, we're going to grab onto that and we're going to hold it, even though it may or may not bear out in fact.
Well, think about when you comp houses, right? And they'll use that house. And I'll be like, hey, but what about these 4? Like these 4 over here actually hurt us, right?
Yeah.
I did that yesterday, and it's Butler Tarkington area, so that's like, not you want to talk about all over the place over there, right? And so I'm like, the price is here or the price is here because I can either sell this quickly for you or we can put it here. We're going to have different competition, and what's your comfort level with a 30 to 60 day sales process to get as much as you want versus selling it quickly, and which are you comfortable with? And they're like, oh, well, let's do this one. I was like, okay. At first I was like, how well do you handle anxiety and stress?
And by the way, there's no guarantee you're going to get the number you think you're going to get.
It's almost a guarantee you won't.
30 to 60 days.
Right? Yeah.
Well, that's kind of what I love the post that you put out, Greg. The other day I saw this come across, and he said it very eloquently about pricing a house. So tell us the way you're finding these stats right now about pricing.
So I went and looked up all the closed sales in Carmel since January 1. And I searched to find out, I wanted to know what the overall activity was. So what I found was that if the home went under contract in less than 7 days, it sold just under 102% of its list price. Yep. And there were 46% of the market sold in a week or less. That's an astounding number, actually. The other 54% of the market that didn't sell in a week or less sold at 97% of list price, and their average days on the market was 63. Yep. You gave away 4.5% to 5% by not selling in the first week because you got too aggressive with your price.
Because it's not just the down part; it's also that you lost the up part. You know what I mean?
You have no leverage. You that doesn't account for price reductions that probably occurred along the way. You probably sold for more like 95%.
It also doesn't include inspection repairs,
which are going to be harder the longer you're on the market.
Yeah, because buyers will maybe forego inspections if they're in a competition. They won't be in a competition at 60 days. The other part you're talking about that is don't forget the carrying cost for that 60 days compared to
for what's the mortgage. So, so we've seen that since October, right? You sold in 7 or you set for 90 at one point, right? And so the market is still doing that. I think the timeline has come down a little bit here over the past, I don't know about you, but I really started to see a pivot in the market the weekend of Valentine's Day.
When the snow melted.
Yeah.
It literally. I
That's-
mean, the
yeah.
snow melted, and we started seeing people coming out. But it was the first 7 weeks of this year. It was slow.
It was,
frankly.
It disproportionately slow. And then there was amazing deals to get for about 3 weeks.
Yeah.
You know, because but then I still had sellers, like I had to get, or buyers, I had to get buyers to adjust very rapidly, because I can remember the first weekend it happened, because it was Valentine's Day weekend and all this stuff. I was like, it's here, and we have to be aggressive now.
Yep.
Like this whole idea, like we can look on day 3 and we can do all this
Yeah.
other
Nope.
stuff.
Nope.
I was gonna look at a house last Monday. I think it was last. I don't even know what day it is anymore. We're so busy, but I think it was last Monday. I think I brought it up last week. I was going to go. I was scheduling a showing Tuesday morning, and I already couldn't, because they had already had in one day 6 offers over list price.
It doesn't surprise me for the right
Yeah.
properties.
And that gets back to having an agent who knows
On a
what's
Monday.
going on. Because if you have a buyer's agent that you, as a buyer, say, I'd like to see it, I have Thursday off, and it's Sunday. And
You're not
he
going to
goes,
get there.
Okay, cool.
Unless it's been on the market 3 weeks already.
One of us will go, no, we need to see it this afternoon, clear your calendar.
Yeah.
And that's where you just really need advocacy from agents who understand where we are.
I did that, and I had to clear my schedule last week, and I got one under contract, because I mean, we got a house. It was in 24 hours, and it already had another offer, and we had to come in. And
You have to be aggressive. You have to move quickly. The market is going to shift. In my world, that happened around Memorial Day last year. I had a house in a big neighborhood in West Carmel. I sold it. It was listed at $1,025,000. It went under contract at $1,055,000. The same floor plan inside the neighborhood. 6 weeks later, went under contract at $940,000. The same house. I mean, 10% difference. Now, that's not all of them, but the point is, the market is an inch wide, and you have got to time that correctly, and you got to be priced correctly, and you got to be conditionally right if you want to maximize that number, because it's just not universal, and you can't predict it. Sometimes we haven't. Let's be honest. We've done this a long time as a crude level of experience. We've got pretty good chops here.
Yeah.
But the fact is, there are still times we put houses on the market, and we're like, we don't know.
Yeah.
Because we're not sure.
I think that's a good answer a lot of the times, period, because we don't know. And that's when people say, what do you think's going to happen? We don't know. We can only go by what's been happening over,
But there's certain things I can help with to help narrow that range, right? So for me, it's like, okay, you want to hit this date, but I also am not in the condition, because condition actually matters more than timing, right? And so I'm like, we have to take the time to get the condition right, or it doesn't matter when we sell.
Buyers and
because
sellers
it won't sell.
Buyers and sellers alike have to remember, when you put a home on the market, you are dropping it into a moment in time. And 2 weeks ago, there might have been 8 buyers out there. Now there might be 4, or there might be 12. You don't know until you get out there. And it's incredibly difficult, if not impossible, to predict. So you have to educate yourself at the highest level, and you have to be prepared to adjust if you're going to be successful. You just can't be rigid and say, well, I'm not giving it away, and I want this much money, and blah. Nobody cares. We're not being cold.
being rude, yeah.
No, we're not being cold. This is the way it is.
Yeah,
So,
and that's the hard part, is they think we're kind of like Debbie Downer or we just want to sell a house, and that's farthest from the truth. I know. For
I think
us,
that is the
really.
perception that oh, well, if you drop the house, obviously it's easier for you to sell. It's like, it's got nothing to do with me. It doesn't move the meter for me in a commission.
No,
right?
has no bearing at all.
On a price reduction.
No, there are probably some, and this is why it's so incredibly important to vet your advocacy, because there are probably agents out there, and we know that a huge percentage of the Board of Realtors agents didn't sell any houses last year, not one. And so again,
if they told one, it was Uncle Jim's. So.
yes, well, and they're just diluting the market and the professional. Anyway, it's incredibly important that you know what you're dealing with and who you're dealing with. You cannot look. Experience is everything. I'm not a Mensa member here. I'm doing okay, but I'm not. The point is, experience has taught me to be good at what I do, not some intellectual, gigantic monolith of me. It's the fact I've done this a long time, and I've seen almost everything, as both of you have, and that's what helps us be successful for our clients.
Because when I'm telling you this, it's not even me saying it. It's the market telling you. I'm just the voice of the market saying, hey, this is our... and it's like, hey, even then I'm going to say, hey, these are our options. We either do this and this is the result, or we do this and this is the result.
Yep.
And then what's your current state to handle either, and what do you want to do? And then we'll make the judgment call on that. But it's just not, I don't know. I just think there's a major misconception. And to circle back to what you're saying, the only reason there's that misconception is because there's a lack of trust. And I will fully put my industry on blast with this, and that's the agent's fault.
Yeah.
It is what we've put on social media. It is what we put on reality TV. It is all of these things, right? Like I can remember, like I used to watch those shows before I got into the industry, right? Like, I mean, you're just like, hey, it's a waste of time. Let's do this, And, I can remember watching them and they'd be like, oh, I won't even present that offer to my client. I'm like, I get it's in another state and every state varies, but like here in Indiana, like I have to present it.
It's the law. It's the law, man. And by the way, I sold a house in one day. Yippee! Shut up.
I know.
Just shut up.
I got 8 offers. Yeah.
Shut up. You're not helping. I mean, you're making it worse for the consumer, and you're actually not making yourself sound good. You're making it sound like you didn't do any work to sell the house.
And they're doing it to be like, look at my validity, and like the validity is like I just sell a bunch of homes. Right. I'm good at it. Like my track record shows that. I don't need to acutely, constantly prove that, and that's what we do because this industry, if you're not good at validating yourself, you will really struggle with validation. And so that's why that stuff happens.
You can prove your value 1,000 other ways besides telling somebody you sold a home in a day. Talk about what's going on. Talk about advocacy that's relevant to the consumer. Don't get out there and say stupid bleep like, I sold a house in 6 hours. I had 9. Shut up. Again, I just want to have a sign, and I want to have on a paddle, and I want to hold up and say, shut up.
That's your next video. I love watching you on social media because you're good, the information you provide. But your next video, just have a sign and just put it up. And
shut up. Shut up. Yeah. You know what? Y'all might be seeing that soon. Y'all might be seeing it.
It matters. Or even like, I can remember saying like a year ago, like I struggle, like I sell, all 3 of us have sold luxury listings, right? I personally believe a listing is a listing is a listing. I give all my listings the same amount. And there's agents who sell on like this perception of luxury. And
in Indianapolis.
This is my personal opinion on it, and to each their own. We live in the Midwest. Yeah. That does not age well.
And we're not Chicago, by the way, either. We're Indianapolis, we love it here, but it's not Chicago. The population base doesn't support a massive luxury market, period.
It does not. It's an insane. I've seen the numbers before on what it actually represents. And then a bunch of us, I mean, there are some agents who do more of it, some who do less. Like I mingle in all the areas, all of us do. Keeps me more well-versed, I guess, more well-rounded. But it's just, the other problem I have with it is, we knew over 18 months ago we were in an economic downturn. Yeah. And that is not good positioning, in my opinion, to be boasting while people are struggling. I just think it's insanely bad. And it's very, very short-sighted, and it's slightly not compassionate.
We have to be. If we are true unselfish advocates, we got to stop talking about how great we are. We got to start talking about what we're going to do to serve people. Pure and simple.
Yeah. And I think all of us do that. And it's just like how do you be the change? Like be the change.
Absolutely.
Like I can be successful and I do none of those things, and it has never impacted my success. Quite the contrary. I have found that it has led to my success.
Amen.
I think one of the problems with that is a lot of the real estate gurus, coaches, and everything are all about social media. Post out there what you're selling. Post this and that. Post that. They push that so much, and I've had all of that put into my ears a lot. So back in the day, even probably 5 or 6 years ago, I thought I needed to put it on social media that I'm a realtor and blah blah blah. At this point, I don't even know why anybody really needs to do that unless they're really trying to push to try to get business.
If it's not about educating, then you shouldn't be.
You're pushing for business only. It's all about you, not about the consumer you're trying to supposedly impress. And what you just said is so true. That's the thing I think about. I just sold $2 million house, and somebody can't put food on the table. And
right now there's going to be the volatility in our economic situation across the country and the world right now. People are going to suffer.
Yes.
I mean, there's
no two ways around it.
There's a statistic out there that says for every 1% the unemployment rate goes up, 40,000 people lose their lives. And that's not mentioning jobs and family struggle. So we need to, and I think it's a huge thing as an industry. It's a really good point that you brought up. We need to be more compassionate. We need to be more caring. We need to be serving in every way we possibly can to help people understand we're truly on their side.
Well, and it's also part of giving somebody a place to live, or helping them move on to the next stage of life, whatever it is. You're not selling, to me, I say we're not selling a product or something like this. We're actually selling somebody's livelihood or their life or what's going on. And I've said this many times, maybe even on here. When I first started, I thought selling real estate, it's fun. Somebody's buying a new house, somebody's selling their house. And I've really learned about 80% of the deals I do are not good. Divorce, death,
That's what I was going to say.
leaving town because the husband got a job and the kids are leaving school and they're juniors in high school, and the wife won't have any friends anymore, and she's a stay-at-home mom with 4 little ones under 5. She's out of her play group. There's so many reasons people move that they don't want to.
It's like, hey, to your point, it's like I sold in a day, like on the heels of this family collapsing.
Correct.
You know what I mean? Like, you don't think about what created that.
I mean,
that's okay. That's not all of them.
I said it's about 80%. I mean, I'm dealing with
death,
one right
divorce,
now.
You know what I mean?
Estate
Somebody
sales.
reloading because they don't want to or whatever.
You're going to get me on I don't know. That's one thing that I really get upset about, because when I sell real estate, I'm here to help them in whatever condition they're dealing with in their life. The house is part of it.
We have the privilege of helping people in happy situations, and we have come to, I certainly have, and I know that the two of you have, I've come to cherish the happy ones.
Oh, yeah.
Because there's a lot that are, to your point, there's a lot of them that are rough, and we're going to have some rough going over the next 12 to 18 months, because there are going to be some people that are going to be forced to move.
And that was when I started 2008 and doing the short sales. Was the people that wanted to do short sales because it was a commission at the end were the reason I got certified in short sales, because I wanted to help the people that were losing their homes.
There was a time in 2008, and we're not there yet, so let's not. There was a time in 2008 where I was going in 3 homes a week, and it was rare that somebody didn't cry. Yeah. Because the circumstances, that the husband lost his job at Lilly and they got to go to Atlanta, and the kid, it's just all of those stories were so tough, and we're not going to have it to that degree.
No, I don't think so.
We're just the market conditions. And by the way, I see this every once in a while by sensationalistic news outlets. We're not going to have a market crash in real estate. There's no supply. If you lose your job, you put your house up for sale, and you sell your house, and you get a big check in most cases.
The only thing I could see happening is and this is projections, because for all I know, everything is fine and we do great and it's thriving. But, I have to prepare for worst case, not best case, because I always best case just works out. You don't have to prepare for it. And so, people will have equity in their homes. People will just be downsizing.
Right.
And so they'll be selling their $600,000 house to go to a $350,000, or they'll sell a $350,000 to go to, $180,000 or whatever it may be. And so, but the problem you have with that is there's not inventory, which then drives the prices back up because of...
I think there's going to be a number of cases, even in Hamilton County, where there's going to be change of employments. People are going to lose employment in some cases, and that's never a fun decision, and people hold on to the bitter end. But sometimes they need to get the equity out of their house. They need to go to a place where they have some short-term housing, whether that's a year or 18 months, and they get their feet back on the ground, and then they move back into the ownership market. That's not a tragedy.
No.
It's unfortunate, and there's probably a little bit of discomfort, but that's not like losing your house in 2008 and 9. No. When you just have to leave the keys on the kitchen table and walk away because you're $70,000 upside down, we're not going to see that happen.
And walk
it's
away
an inconvenience
with
and a
inside.
soft landing at best, right?
Yeah.
And it's uncomfortable, right? But there were literally lives destroyed because of 2008, and we talk about it because people... I can remember a year ago we did a podcast where people were wanting the housing market to crash or whatever, and I was like, I don't think you know what that actually means in its entirety. Part of the reason that people say that millennials and they're buying later and all of that stuff because they're renting and they put a lot of it on housing costs and it's too expensive. I think a convenient piece that gets left out is they were also very scared of home ownership because they were the teenagers when 2008 happened.
Exactly correct. I think I think a lot of that has dissipated as we've seen the surge back into the market by the various different demographic groups. But it wouldn't take a whole lot to remind people.
Yeah.
I think.
Yeah, they say the average first-time home buyer is 38 right now.
Yeah, it's going up considerably.
That's insane to me that it's that high. But I get it. I just do. We live differently than we used to, It's not just the price of it. The price does matter, but there's a lot more that goes into it.
Well, the credit card interest rates, we were talking about that too. I got a credit card change of interest rate went to 33%. That just, I cut it up. I'm like, I pay them off,
I'll pay
but
cash.
I'm not
cash,
even going to even fathom that you think you can get 33% from people. That's just rude.
So let's talk a little bit, if we could. I'm sorry, guys. I'm going to try and bend this in a direction, but let's talk a little bit about the affordability factor is really tough right now everywhere, especially in the high demand areas that you want to be in. So if somebody says, gee, I'd really love to be in Carmel, but I can't afford $500,000 or I can't afford $7 or whatever, I'm an advocate of do what you can in that area because the values are still going up, and get involved in the community. I mean, there's condominium developments in Carmel where you can get in at $250,000 or in some cases a little less.
Yeah. Mm-hmm.
That may not be for everybody. I get it. I mean, I have a son going through that right now. I want him to get into ownership. Well, we want a house with a yard. You're not going to get a house in a yard in Carmel once you can afford right now. You're 26. But that's okay because by the time you're 30, you're going to be in much, much better shape, and you're going to have $50,000 or $60,000 or $70,000 in equity in that condo that you're buying because it's 7 blocks from the Monon Trail or whatever the location may be.
But is that, do you think, so it's the affordability, but it's also the instant gratification, right? Like, so my current house, I've lived in there like 10 years, I think, this month, right? But I've lived in 2 other houses before that that were all part of the leveling up process. You know, we bought like a ranch over like off of like 79th and Harcourt back in 2003, and then we moved over to Lawrence, like 86th and Carroll area, like around 2008. And each of those we lived, you know, in like 5 to 8 years.
Right.
And like that's how we did it. We didn't have the money.
Right.
You know, we just paid down equity. We got in, and then we just, you know, the idea that you get to be in like a 46-year-old's house at like 28.
It's really not happening now. It's really not
Well,
happening.
and it's weird is what's putting them in that position is the house maybe that they came from, and they don't want to go down. Mm-hmm. They want to stay even.
Yeah, well, they should have came right out of the dorms at college and go right into homeownership, because then it would have still looked like it was the Taj Mahal to them versus living. I mean, some of the temporary, we say short term is probably a better word. Some of the short term apartment situations are gorgeous right now.
Yeah.
So it's
the ones
hard.
that are being built.
Yes, they're so beautiful that I think there is
like Proscenium or whatever. It's got a golf simulator.
I mean,
it's amazing.
when you have granite and hardwoods or LVP or whatever, and it's all brand new, and you're ground floor and you're overlooking the pool, you don't necessarily want to move to a 35 or 40-year-old condominium where you're staring at the back of another brick building. But that's what you need to do if you want to get into home ownership. And by the way, as an investment, the people who are 50 to 55 years old, their accrued life's wealth is 20x of what a lifelong renter is going to be.
Yeah.
And so you cannot go wrong over the long haul, even if you have to make some decisions in the short term that are less than perfect for you. Get yourself some home ownership, because that is what is going to be a true path to wealth for you.
I have a client right now who has been a homeowner and just has realized, because of her lifestyle and age and all of these things, that home ownership is not for her, which that makes sense to me. But I have a buddy, and he does, you know, very well for himself, and he rents. He has been a homeowner, but now he rents. And we were like, where does the value, what does your net worth have to be where actually ownership hurts you versus helps you, right? Where the money is better in the market. And like when we did the math on it, we were like around $10 million net worth is where suddenly renting can make more sense than home ownership.
And
so
lifestyle.
And that's such a rare,
I mean,
and lifestyle.
Do you live in Florida 5 or 6 months a year? Do you? I mean, I have people who've done that, who've sold their homes, and they've got a really nice rental accommodation, you know, in Hamilton County, and they go to Florida and they've got a place down there, and that's okay. I mean, that works better for them. I just think if I'm trying to guide a younger person who's trying to create some intergenerational wealth for him and his spouse or whatever the case may be for themselves, you've got to look at the long haul. And the reality is that people who have bought property always end up better off in the long haul. Now, at different points in their life, it may mean different things. Mm-hmm. But when you're a younger person, that needs to be a huge focus and it may mean a roommate or whatever. You know, you may have to be able to be flexible in that. But I think that the data is so overwhelming for people to grow their personal wealth that it's just an incredibly essential thing to do.
Long-term wealth, home ownership is the tried and true way to do it.
Yep.
And we think everything is so expensive right now. Out of college, my wife and I were pharmaceutical reps, and we were doing I can remember like thinking I was rich. I was like making $40,000 or something. I was like, man, we are rich, you know. But because it was like kind of out of college. But we worked 2 jobs. Yeah. And we had a house, and even back then in 2003, I can remember like my wife working like seasonal Macy's and stuff like that.
Right.
Like it hasn't changed that much.
Right.
I just forget, right?
There's some culture. You're right, and there's some cultural issues going on. My kid doesn't want to work on the weekend. And
Neither do we,
well,
but we do.
we don't have a choice.
I don't have a choice there.
But there's a lot of, I think there's a generational issue. I see that in a lot of his friends. They want to walk out of there at 5 after 5 on Friday afternoon, and they don't want to think about it till Monday morning. And unfortunately, that's not the way each of our generation got to where we are.
Right.
You had to dedicate yourself above and beyond to be able to get to that place where you can enjoy the fruits of something like that in buying a property.
You got to sacrifice free time with your friends and stuff like
Yep.
that. I mean, people talk about us and, they're like, oh, that job looks great. Like, I try to be transparent with everybody how much I work.
Yeah, it's
and
a
it is
ton.
an
It's a
insane
ton.
amount.
Yep.
It is absolute insane amount.
We do that because we love the job. We love being able to serve people, but it provides an opportunity for us to do right by our families in the long haul, and that's what's really most
That's the
important.
sacrifice.
That is. But don't kid yourself. When you're working trying to get an offer accepted at 8 o'clock on a Saturday night, and the rest of your friends are all at dinner or whatever, and or going to some concert, and you're dealing with that, you are making a sacrifice. But this is why we do what we do, because we love that.
Or you're telling the guy that you're going to be marrying, I'll be there. I'll be at the wedding in a minute. I was writing it off. I was writing it off for an hour before I had to leave, and I did my makeup in the car. So we do sacrifice, and we do what's right for our clients at all kinds of times.
I know that day, too. So that was February 15th.
14th.
14th. I thought you got married on the Saturday. But
February 14th.
So you did that on the 14th, on Valentine's Day. And then on the 15th was my mom's funeral, and I was dealing with real estate techs at my mom's funeral. So your wedding and my funeral, I was still, my funeral, my mom's funeral, I was still working.
And they knew.
Oh,
They
yeah.
knew.
So, you can tell people
And
all day.
your people knew and my people knew,
Yeah.
but it's
nuts.
There's a lot. There really is, and so if we take 2 hours and go attend to personal matters, a doctor's appointment or whatever it may be during the week, don't kid yourself. There's another place that we're having to make up for that. We just don't get to take half days off anywhere at any point in time, and especially on the weekends when we have to be working in some capacity all the time to be able to make
At a
progress.
minimum, on call.
Yeah.
Right?
yeah. And going on vacation is, to me, almost stressful. Because you
agree.
just know that when you're there, you don't have the computer at your very disposable like you could here. Your phones are going off, and your family's wanting you to pay attention at the dinner table. And so vacation to me is super stressful.
I just get to work from a different location.
It's exactly right. I
Well,
get to
that's
work with a
exactly
beach in
right.
front of me.
Right. That's the thing. But it's just when I was on the cruise, I had no phone. I couldn't use the phone. I couldn't have access. It was the most stressful thing.
Yeah. It's a tough thing.
I don't know.
We love it. We're not complaining.
I love my
but
job.
it is
I absolutely
sometimes
love
you're
it.
just like, oh my gosh.
Yeah,
Everybody
it's-
wants to get into it. They want to live vicariously.
Again, it goes back to the thing from a little bit ago that we were talking about. The perception is when people are in our business are putting out that we sold a house in 2 hours,
Yes.
then they think that we're not working very hard. And unfortunately, we know the other side of that, because that's why we have survived the decades that we have in this business, is that we've given what we need to give to be able to get to that point. And so that's why it's even more maddening when people make it seem cliche or easy. I mean,
And that's what brings another 100 people into getting their license, because they saw those posts over and over again.
Exactly.
But I think when you see something like that, I'm like, but how did it go after that? Because for me, right now, people are on the inspection process. It's getting difficult again.
It is.
So
It's very contentious.
Let's look a little forward. While we're at it, let's take a little look forward. We're doing this between the start and the middle of April. So where do we think the market's going to be in 6 weeks? Where do we think it'll be in July? Where do we think it'll be in September? We don't have a presidential election to deal with this year, although I'm not even sure what the effect was of that. I thought it was going to be a significant thing, and the market took care of the market almost ignored it. It did. Because usually after presidential elections, historically, we will see a little surge because there's some stability.
Correct.
We didn't see that in November, December this year.
They always say interest rates come down in election year too.
I mean, we you know what? That is going to be a benefit, unfortunately, of all of the volatility right now. I mean, we're going to see rates in the 5s maybe in the next couple of weeks.
Which is what buyers are waiting for.
They are.
And that makes me a little concerned of what our next
We're not
few
going to sleep
weeks.
till
No.
Labor Day. We're basically
And sellers, if you're thinking of selling, like you said, find that window. It's probably the window is coming the second. They just said yesterday that rates went down for the lowest in 6 months, which isn't a lot of timeline, but predictions are now in the 5s. We were hearing that, though, before the election, which it didn't happen.
At the beginning of 2024, every big brain in the country was saying we'll be in the 5s by July. Never happened.
Mm-hmm.
Everybody thought that.
We didn't even come close.
We didn't.
we went up.
Yeah. So, but I think that with what's going on around us in the overall economic market, it's not unreasonable to think that we're going to continue to see. I mean, rates have sagged back 6-7 tenths of a point, probably from what they were at their peak over 7. We're in the mid 6.3, 6.4, 6.5 range, depending on who you talk about in credit score. I don't think it's unrealistic with the volatility going on to think that we can end up at 5.8 or 5.9.
And that's going to sound so low.
Well, that's
But
the
like
thing.
when? September?
I
it
see
won't be super- you
I
think
see
it'll be
midsummer.
I do
think
too.
midsummer.
I think midsummer, just from what everybody's saying, and I'm listening to news outlets. I'm not just like reading it on Facebook, but that just seems like something that we're going to see, and the buyers are going to go crazy.
There's going to be a stampede. There's going to be a stampede of people because there's so much money on the sidelines right now. And while, yes, there's going to be some economic pain for some people relative to employment, there's also people that have been waiting and waiting and waiting, and whether it's upsizing, downsizing, first-timers, there's going to be a stampede. At some if we see 5.8 in people's brains,
Yeah, that's low.
that is dopamine to home buyers and
And
sellers.
compared to the 2.9, now 5.8 sounds good. But the one thing about that too is I think it still stands true is buy now before the prices start going up because of the stampede, because you can refinance, and almost every one of those lenders out there will do a free refinance.
And look at an adjustable. Not every company does a great adjustable rate. Some, I mean, I'm talking about 5 to 7 year adjustable mortgages. You've got to shop this because some are stronger than others when it comes to that. But I don't think there's anything wrong with doing something like that. And if the 30 years drop, fine, refinance and lock it in. But at least in the short term, it'll make it more affordable for you.
I still push 2 1s.
Yeah.
I still do.
Yeah.
Because so if it doesn't sell in the weekend, like, or 7 days, like all day, I'm going to try to get a 2-1
Yeah.
for my clients
Yep.
all day
Yep.
long. You know, I'll be like, list price and 2-1, let's go. You know, I think it's still a great product, and I don't think it gets used enough. I do struggle with, you know, it's a whole thing to explain to your buyers. I don't think agents are explaining it to their
They're not.
sellers.
No.
Yeah, because we had one. You know, I think we were putting 20% down, and we wanted 2-1 on it.
Right.
And the sellers kind of balked back at us because they didn't think we could afford the house
Right.
because we asked for a 2-1.
Right.
We're putting 20% down. They're just smart financially. You know what I mean? I could've
Sellers
just offered
and
you
buyers,
10 less.
listen to your broker.
Yeah.
Please get somebody that you can trust and listen to them because the experience does not lie.
Well, I think what's opened it up in the listing contract when you're having a conversation with your sellers is to actually have the conversation about the commission, whether or not the buyer's agent, all that it's all about. But the secondary part of that is, okay, what can you expect with the buyer's agent commission coming towards you? What's that going to be in the purchase agreement? How are we going to negotiate that? But to explain to them every possible scenario that may come in that purchase agreement, because if you do get 6 offers, even if you get 1 offer, that is not the time to start explaining what a 2-1 debt buy down is, or why that commission just
Gonna
came
talk
across
about it
on the
way
purchase.
ahead of time.
Yeah, all of this is something that even you say with buyers, like we were talking, if you don't talk to them about what they're going to expect when they walk into that house and say they absolutely love it, and then start talking to them about how they need to make an offer, and they're like, I can't do that. Like, you're wasting everybody's time.
Yeah, indeed.
Well, let's jump into the stats just so we can kind of see where it was at, because I don't know if you've looked at this, but it was really crazy a week ago.
Yeah, last week was nuts.
But I'll jump into Fishers real quick. So, and this was a spring break week, is that right? You got the
Yeah,
dates here.
so Washington Township was ended. Right now we're in Carmel, Southeastern, Noblesville, they're all on spring break. Westfield is on spring break. Zionsville's over, Lebanon's over, Avon, Plainfield, and
McCordsville's
Brownsburg are over.
McCordsville was over a month ago. but
Yeah, so this week is quiet and last week's quiet, but then
Yeah.
It's gonna, so everybody will get back. It'll be back for a week. Then you got Easter, and then it'll open up.
and then we
week,
have
April.
all the
Yeah.
the graduations, so that always slows down. Month of May,
Yeah.
you know,
You
so
never
May,
know.
That's the thing.
May, yeah.
So Fisher's on last week would have been their week before spring break, right? So, because we're doing last Tuesday to this Tuesday. I had 40 go on the market, anywhere from 235 to 3.3 million. 24 of them are still on the market. 16 pended that within a week, but 37 total pended last week, right? So, I only netted 3 in inventory last week. There's 116 on the market. Average days on market is 21, and the median is 5. So the interesting thing is last week, the average was 36, right? Because we're getting rid of stale stuff.
Yep.
The median was 3 again. And 3, as we were talking about, 3 is our 0.
This is a good place, based on these stats, to remind people, do not listen to national media. Because there's a lot of conversations right now about how it's shifting from a seller to a buyer. It is not shifting.
Oh my gosh, yeah.
In Hamilton County especially, it is not shifting. Meridian Kessler is not shifting.
You had a window from November to January.
Yep. And then we won't see that again for a while, and we don't know that it's going to be like it was in 24 when we get to that place this coming year.
But like you were saying, we were talking about when you see 3 days as the median, that's because it took that long to pend it. But the offers came in on day 1.
Exactly. Yeah. 3 days is not 3 days. 3 days is actually 3 hours.
We were saying 0. Yeah, 0 days.
0.
If it's 3, it happened 3 days ago.
Yeah.
So
Yep.
those are a little misconceiving.
And then Noblesville, I had 29 go on the market, anywhere from 235 to I can't read my own handwriting because I'm 1.9. Sorry, I need readers. This is getting old shits for the birds, by the way, guys. I have 19.
Tell us. Preach.
Sorry, I have 19 on the market.
And why did you look at me when you said that?
Wow. Really should have been looking to the right.
Wait a
You're right, man.
Because the sun's over there. It's bright.
No, whatever.
10 of them pended within a week, but I have 26 that actually pended last week in the past 7 days. So I only picked up 3, right, in the inventory. I have 134 on the market, and their average days on market is 23, and the median is 8. And so what that means is a lot of that stuff that we saw sit in October-ish to January, it's getting picked up.
It's getting gobbled up.
It's getting picked up. And so that's why the average days on market is going down, is because I'm losing stuff that was 90. I mean, when we circle back to what I said about last week, when the median is 3, that means, that is the middle if you lay them all out. That's because there's a 260 day in there that raised that up to 30 or whatever it was, right? Because the median is the much more important number. And so we've just kind of talked about, like, there's 2 markets. You sell in a week, or you sell in, like, at this point, 30 days, right? Those are the 2 markets.
And if you're at 90 days, you need to readjust and see what's going on.
Yeah, you're overpriced.
So Carmel, 42 hit the market. 17 of those 42 pended. A total of 33 pended. And we'll remember last year the average was 4. Last week. Average was 4 days. Median was 3. This week we shot way up to 28 and average and 7 median. Not way up, but 4 and 3 to 28 and 7. So we slowed down.
It's another example of what Kyle said about the house has been out there a while getting gobbled up. The ones that have been out there 90, 120, 140 days, they're getting gobbled up and they're raising that median. It doesn't mean the market's not still incredibly active. In fact, it might mean the opposite.
It does.
It means it's super active, basically.
It means we're losing the old stuff.
Yep.
That's how active it is.
And that just means that's where we're like giving up on what's coming on the market. Let's just look at what's there and maybe get a better deal. Because the list to sale ratio on those 28 days, like you were talking about before, all these stats can be read whatever way you want to as you take care of looking what they're doing. Active currently in Carmel, we have 158. Now, this is where we're talking about the 2 markets. Sitting out there right now, the average day in market is 59, and the median is 32. So right now, those that are sitting there are 30 to 60 days on the market. So that's kind of normal, but it's sped up from when we were looking at 90. Sold 90 in the past 30 days with an average list to sale ratio of 99%. In 30 days, it was 31, and the median was 5. So Carmel's just staying steady. If you have a great house, you're going to sell in that first month or 30 days at least. Westfield, 37 hit the market. 13 of those pended, but a total of 47 pended. So we lost 10 in inventory. Average days on market was 33. Median was 12. There's currently active in Westfield with all the new builds was 222. 68 average days on market. Median is 34. Again, that's a lot of those new builds. Sold 124 in 30 days. Their average list to sale ratio is 98%. Average days on market is 48 and 23 median, so it's staying kind of steady. Zionsville, 12 hit the market. 5 of those pended, 10 total pended with an average day on market 11 and median 4. That's just because their inventory is so low. They'll always have low dates. 61 currently active. 95 is the average days on market of those 61 and 32 median. So there's some long-term ones sitting out there in Zionsville. 32 sold in the past 30 days with a 99% list to sale ratio. Average 21, median 5. So
if your house is sitting out through 3 months, you need to think about your price.
Yeah.
You're not priced right. You're hoping for something that's not going to happen because you've been out there 90 some days, and the buyers are going to use it against you. You need to adjust your price. That's when you have leverage.
Yeah, because you won't sell at that price.
No, you're not going to sell that. No, they're going to say,
Yep.
there's a reason. The buyers are looking at you going, why have you been on the market this long?
Yeah, there's always the what's wrong. And if you come back on the market, there's always the what's wrong. Because we're with buyers all the time. We know what they say
Yep.
when certain things happen in the market. And then their sellers, we're trying to tell them, I know what everybody's saying about your house is what's wrong.
Yeah.
I mean, we physically get those phone calls.
Yeah.
Why is the house still on the market?
And sometimes it's nothing. It's just overpriced. I see stuff
90% of the time,
Yeah.
it's just overpriced. At this point.
I can look at like when you went on the market, and I was like, they lost 2 weeks. I mean, I was looking at one literally yesterday, and it listed December 18th, and I was like,
There's 2
it
weeks.
ate up. It lost 3 weeks instantly,
and
then
somebody
it was
did
stale.
not plan well.
And then it was stale.
You should have waited till January 2nd. I mean, granted, we had weather, but you can almost with certainty say December 18th, that's a terrible time to put a house
Yeah,
on the market.
days on market 21.
Boom.
Count on it.
Yep, absolutely.
Instant 3 weeks on market, 21 days, and people are like, "What's wrong with this house? It's amazing." And then it just snowballs from there.
Yep.
That's how much it matters to your point when you hit the market.
Yep, big time.
Yep, it does.
Anyways, so I love having you on, man.
Oh, thank you.
I mean, you're a wealth of knowledge. I just love interacting with you. I'd love to have you on more. Plus, it's like getting a band back together. It's like
That's
the Blues
right.
Brothers, man.
That's right. We didn't have any Yoko on it to deal with this time. It's all working out perfectly.
Yeah. This is amazing. So
I highly recommend you just watch. You can give away your. Is it TikTok that I'm watching, or is it Instagram?
I'm Greg Cooper Realtor. Greg.Cooper.Realtor on most platforms. I think Facebook might be a little different, but we're all so easy to find. Let's
Yeah.
just be real
Well,
frank here.
you're the epitome of what you just said. Give information,
Yep.
not I did.
I don't want to
this
sell
today.
anything. I'm not selling anything.
No,
I'm
you-
just out there saying things because I think it's good for everybody if we advocate
Well,
correctly.
you know what? You say things I would love to say, but you have the balls to do it. shall
Well,
I say.
we're going to say shut up on my
Yeah.
social
Yeah.
very soon. I'm going to have a whiteboard that says shut up.
yeah, you're
ask
not
me,
kidding.
and then say, "Ask me what that means," so people understand what they need to shut up about.
Yeah. So, anyways, we'd love to have you back. I'm Kyle Morris with Morris Property Group and FC Tucker. My number is 317-649-5122.
I'm Shelly Walters with the Shelly Walters Realty Group, FC Tucker, 317-201-2601.
And I'm Greg Cooper at Compass Real Estate, 317-441-7166. And as I say, I like to be called between midnight and 6 a.m. That's my favorite time of the day. So please, after midnight, any time is good.
Text and send photos. Right?
Oh, wait a minute. Now, texting is fine. Thank you.
Texting is fine.
And it's not him. I'm just going to say that. It's not him.
Yeah. No kidding. Yeah. Creating
Thanks.
fake bumbles.
Thanks for having me, gang.
See you guys next week.